NMLS exam questions and answers. The federal mortgage related law. Here are few questions considered to be very good for the exams and also cover the basis. Here's the first question. As set forth by RESPA, at the time of servicers created a or an for a borrower, the servicers may charge the borrower an amount sufficient to pay the charges respecting the mortgage property, such as taxes and insurance, which are attributable to the period from date of such payment were last paid until the initial payment date. So fill in the blank in the section. So as set forth by RESPA at the time of the services created in a. So what is created is an escrow account, including property taxes and insurance. Here's a good explanation. As said forth by RESPA, at the time a like servicer create an escrow account for a borrower. The servicers may charge the borrower an amount sufficient to pay the charges respecting the mortgage property, such as taxes and insurance, which are attributable to the period from the date of such payment were last paid until the initial payment date. Question number 2. Within 3 business days after MLO receives a complete mortgage loan application, the MLO must provide the applicant or customer or consumer or borrower with a written list of home ownership counseling organization. This list must include at least how many HUD approved housing counseling agencies in the applicant's area. Why uh, you need the list of these counseling agencies? Because you are going to be in a burden of a fixed payment when you buy a house. So the federal government wants to know that are you prepared or is this is like going to be a burden which you cannot tolerate. So make you prepare for this, make you aware of the extra payment burden which is going to be for the next 30 years in most cases. So that's why you need list of HUD approved like housing counselings, which are, I guess, non-profit organizations. So here is for this question. The answer is 10 HUD approved housing counseling agencies. Question number 3. The Federal Trade Commission's telemarketing sales rule prohibits deceptive and abusive telemarketing act practice, including establishing standard for conduct for telemarketing calls. This rule prohibits telemarketers from calling anyone. Well, in this case, like Federal Trade Commission's that rule about the deceptive and abusive practice. So the calling anyone. So usually the FTC prohibit anyone calling you before 8 a.m. and after 9 p.m. So the calling should be between 8 a.m. to 9 p.m. Question number 4. Which federal regulation limits the length of time that adverse collection information may appear on consumer's credit report? So here asking about the federal regulation. So the name of the federal regulation is Federal Regulation B. So which is also known as Fair Credit Reporting Act. Now the question number 5. Regulation B, which is also known as ECOA, set forth that in any system used for evaluating creditworthiness, a creditor may consider the age of an elderly person or applicant when such age is used to favor the elderly applicants in extending credit. As defined and used in the special rule, elderly mean is dash for older. Here the answer is 62. So remember the age of the elderly person, that's age 62 or older. Question number 6. Under the Equal Credit Opportunity Act Regulation B, that's ECOA, which source of income may be excluded for the purpose of qualifying the mortgage income? Under the ECOA, which source of income may be excluded from the purpose of qualifying the borrower's income? When you apply for a mortgage loan, the underwriter will consider anything which is temporary or short term will not be considered as your income. So short term disability income will not be considered as a regular income to be included for the qualifying income section. Question number 7. Within 2 days of receiving the initial loan estimate, Ron wants to switch a cash out refinance because he needs a few dollars more than expected. Which of the following is true statement as it relate to the lenders providing the revised loan estimate? Which of the following, which is okay, we can also say which is true. The answer here in this case will be this is consumer's request change that allows for revised loan estimate. Well, here in this case, because the consumer, like a consumer has requested, so it should be in most cases, if it is considered legitimate, so then it should be considered by the lender. So lender may use a revised salary if the consumer's request revision to credit terms or settlement that affect items disclosed on the loan estimate and cause an estimated fee or charges to increase. So anytime when there is a valid reason, so loan estimate can be revised. Question number 8. Question number 8, the loan originator's compensation rule. How much MLO or the loan originator will be paid. So there is a compensation rule as implemented by the Regulation Z set forth that the mortgage broker's compensation paid to the employed MLO can be based upon any of the following trigger except, well, that answer will be the loan program type. What type of the program is based on the loan type? That is a set by the regulation C set forth the mortgage broker's compensation paid to employed ML. Question number 9. Question number 9 is HMDA is implemented by regulation. Which regulation? HMDA stand for Home Mortgage Disclosure Act, HMDA, and it is also known as Regulation C. So HMDA, Home Mortgage Disclosure Act, is implemented through Regulation C. Now the question number 10. Under Graham-Leach-Bliley Act, implemented by Regulation P, dash empty space here, must receive a financial institution's privacy notice every year for as long as the relationship lasts. So in this fill in the blank, what should be there? Under the Graham-Leach-Bliley Act, implemented by the regulation, it is about a relationship between the financial institutions and the customer. So here the answer should be customer. Under the Graham-Leach-Bliley Act, implemented by Regulation P, customer must receive a financial institution's privacy notice every year as long as relationship lasts. Here, next question is question 11. So, which of the following is not a function performed by Consumer Financial Protection Bureau? That's Central, that's a Consumer Financial Protection Bureau. Consumer Financial Protection Bureau. So it's enforcing agency. So let's see here. So Consumer Financial Protection Bureau does not do this. Like it does not maintain a competition to promote a marketing place free from anti-competitive merger, business practice, or public policy outcomes. So what it does is like it enforces most of the regulation, the federal regulations. Here, and more an explanation will be here. The Consumer Finan- this final financial, the Consumer Financial Protection Bureau aim to make consumer financial market work for consumer, responsible providers, economy as a whole, and arm consumers with the information. steps and tools that they may need to make smart financial decisions. Decisions. Let's go to question number 12. The telemarketing sales rule prohibit calls from the consumers later than how many days after the consumer asks to be included in, like on the do not call registry. So if you want your number should not be called by the telemarketers, so you need to register yourself on the do not call registry.com. Well, so once you like add your number and then they have how many days? 31 days. So answer here is 31 days. So in this case, it's saying the telemarketing sales rule prohibit calls to the consumers later than how many days after the consumer asks to be included on the national do not call, call registry. And here is 31 days. Question number 13. A higher price mortgage loan is one that, as evident from the name, higher price, which is like the mortgage that is high price. So here the answer is a higher price mortgage loan is one that uses the average prime offer rate as an index to compare the annual percentage rate. And it's also known as Section 32 law. So now we'll go to question number 14. The TILA-RESPA regulation applies to which of these loan types? TILA-RESPA rule. That's a TRID. The TRID rule applies to which of these loan types? And the answer is adjustable rate mortgage loan. Next question, question 15. Fill in the blank here. Within the GLB Act governs the collection and disclosure of the non-public personal information to third party. What is that called as? So that is known as financial privacy rule. So the financial privacy rule of Graham-Leach-Bliley Act, within the Graham-Leach Act, governs the collection and disclosure of non-public personal informations of the third party. So what is the non-public? Which is not available to the public. I mean, if your phone number is listed in the white pages, in the directories, yes, that's not your non-public personal information. So non-public example of the non-public personal information is how much you make, how much is your income from particular organization or something like that. So those non-public information should be very carefully shared with the third party. So here, the Gramm-Leach-Bliley Act is about one of the reason. That's financial privacy rule. Now, question number 16. Question number 16. When asking questions as a part of mortgage loan application process, ECOA Question against asking question that may be construed as discriminatory in nature when asked of a borrower. So here one of the example for this will be you can ask like what type of the house you're looking for. Here is a general. But if you ask, are you looking for a house which is above 400,000 or 500,000? That will be discriminatory. Or are you looking for a house less than 200,000? So here, what type of the house you're looking for is okay. This will not be considered as discriminatory in nature.